We're later in the cycle, and so it may be more difficult to keep on putting up prices. Even in the companies like Givaudan, which has such specialized products. Again, it is something that we'll have to see whether it's just them or whether peers also are suffering, peers elsewhere in Europe and in the US also suffering the same fate.
This quarter has fairly downbeat expectations around it, and the market's not very optimistic on what they're going to see. And there is a view that by the time we get to the fourth quarter this year, we're back when it comes to earnings. Is that likely in your view, given that all the pressures are still mounting?
We still expect a recession later this year. Our lead indicators that have given reliable signals of a recession point to a contraction in the economy later in the year, in the fourth quarter. So we think that, yes, the market is a little bit too optimistic with respect to the soft landing. We think that there will be some difficulties ahead.
So how on earth do we grow earnings by single digits, high single digits then, by the final quarter of this year in that context?
Again, difficult, very difficult.
Frederique, let's get some more specific calls drilled down into them. And you've got key opportunities. Can we get up a Nikkei board, if possible, for the last year? Because Japanese equities, you've got an overweight. Just explain to us. And you said return of inflation. Have you told the BOJ that they've got a return to inflation? Because as far as I can see, they're still acting as if they haven't got one.
They still are, but we expect at the next meeting in July that inflation expectations will be revised up, and that will give the pretext to the Bank of Japan to abandon the yield curve control policy. So for Japan, it's a position, an overweight is a position we've had for a number of months. Before it was fashionable, I wanted to add. But it's the return of inflation, they're above average growth. It's also the crackdown on corporate governance from the authorities. It's a market which is trading very close to 20-year low levels, which is something very difficult if you, to find elsewhere. If you think of the US, how expensive the market is. So we think there are opportunities there, in particular in the consumer sector, consumer companies which are benefiting from Chinese tourists coming back to the country, and also in financials, which can benefit from the abandonment of the yield curve control and also the crackdown on governance in order to improve it.
If you think there's going to be a step away from yield curve control, are you mindful of a potential yen appreciation, and do you have to hedge around that? So
we think that that will come, but later, not initially. We think that interest rates will still be low enough for the yen not to increase to such a level which would be punitive. What we're seeing, of course, up until yesterday was really the weakness in the dollar and on the rise of other currencies. But we don't think that the yield curve control by itself, changing policy, will bring the yen at difficult levels.